Why does someone need to raise capital?
Well, there's a number of reasons, Dave. I guess most obviously their business could just be growing. So, as you grow, you give credit to your customers, your debtor book rises and it sucks cash out of your business, and you're in danger of overtrading. So, if a business is growing very fast, it's very likely that they'll need to raise some capital to go along with that. Alternatively, they could be looking to grow even faster than that and actually looking to buy another business, so make an acquisition. They could be looking to do a management buyout. So, for example, if the management don't own the business but they want to do an ownership change, they could raise a load of finance to buy the business out. Or an owner could be wanting to actually just raise capital to release some equity. So, raise some debt or bring in a new shareholder so that they can then pay themselves some money and get some cash out of the business. And I guess those are probably the most common reasons.
And what sources of this sort of finance are there?
Well, it depends really on the size of the amount of money you're looking to raise. I mean, if you're looking to raise kind of under a few £1,000,000 or under £4 or £5 million, then you're really looking at the venture capital trust market, which is a kind of offshoot of private equity, I guess, that's regulated by the by the government. They get tax breaks, but they're basically small venture capital funds that invest in businesses. You might also be looking at business angels, and again, of course, you've got your high street bank. But again, they're only really going to lend to businesses that are very low risk. 5 million and upwards, then you're getting into the kind of private equity arena. Certainly once you get above £10 million in terms of fundraising, then you're very much into the kind of mainstream private equity market, which is very well populated by some excellent funds.
So how would you go about this if you needed to raise finance?
Well, I think it's just really important to understand it, and also to understand that certainly in the bigger deals, and actually increasingly in the smaller deals, banks and private equity houses or venture capital trusts, they don't really want you to walk in off the street and come and tell them about your business, because it won't be presented in a way that they can easily digest. These guys see quite a lot of businesses, and they want them to be presented in a certain way. They want them to be understood, and they want people to be properly advised. So I think for most people, wanting to raise several £1,000,000 and upwards in capital for whatever reason, it's a very good idea to go to a good quality corporate finance advisor and get some advice on how to do that.
So tell me how I can find out more about this.
Well, there are a number of information sources on the internet. I think I always direct people to Corporate Finance TV because it's got numerous interviews. You can sit in the comfort of your own home, listen to videos of tutorials on all different aspects of the process and raising money and what management buyouts are and all sorts of different things. But then also you can listen to interviews with people who've done deals, people who've raised money, people who have put money into businesses, so private equity firms, venture capitalists, and people about their acquisition, their criteria for putting money into future businesses. So there's a whole wealth of knowledge there, and it's all available free, and it's largely in video format, although there are a tremendous amount of blogs there as well.